Bitcoin is once again at a pivotal crossroad, and that's exactly what we'll discuss in today's episode. In this case, we'll look at how and when we'll know whether Bitcoin is still in a bigger correction mode or whether it's ready for new all-time highs. So stay tuned, and if you appreciate this episode, then please return the favor by hitting the like and subscribe buttons. And as always, not financial advice. Now, before commencing, I've spent the last couple of weeks doing further research into the RSI. Apart from the regular analysis work I do, I've spent most of the awakened hours analyzing and further expanding on loose ideas that have emerged over the last couple of years. I made several remarkable findings indeed, many of which I'll share with you whenever the time is right. But first thing first, let's get down to business. First and foremost, Bitcoin is in the midst of a potential channel outbreak after having dipped by a bit over 40%, a magical retracement number in Bitcoin to anyone who knows their Bitcoin history. Now, as long as this breakout can remain intact, things do in fact look promising, and especially so as this downward spiraling range has been rather narrow thus far. This low volatility has on its own paved the way for a significant move in either direction. And so far as we build onto our technical case, we have good cause to expect such move to the upside. What's next is that Bitcoin has respected this key horizontal support zone, at which we've now also seen a local double bottom. Now, needless to say, for this bull case to remain valid, we do not want to close below and stay below $40,000. This breakout thus becomes extra sensitive, as a retracement back into its range would equate to a fake out. And we all know what those bastards tend to do. They tend to move aggressively in the opposite direction, or in this case, downwards. The last time Bitcoin made a fake out was in late December, upon which the price plunged by 23% over the course of roughly 2 weeks. If we look crassly at the graph, we can rather easily identify that we're up against some serious wide EMA ribbons right above. However, given that we're highly likely still in a primary corrective mode, as in a big flat correction, this here is one of those indicators that rather acts as noise when utilized in the wrong fashion or at the wrong time. And this might just be such time. One simple clue to this is how Bitcoin has flung back and forth through these ribbons a bit too easily throughout this entire prospect flat correction. But how then do we motivate Bitcoin still being in a corrective mode? Well, if we look at the RSI on the daily chart, we see that it has swapped back and forth between a bullish red and bearish blue RSI channel. And to those of you who may not know, an RSI channel automatically shifts to a bullish red upon closing above the upper bullish red line, typically set at 70. And conversely, the same concept applies in reverse, at which we automatically get a bearish blue channel upon closing below 30. And for more on this, please watch the extensive RSI trilogy on this very channel. You may thank me later. Now, why then is it relevant at all whether Bitcoin moves within a bullish red or bearish blue channel? Well, the answer is rather simple. Whenever something is trending, it'll stick to either. For as you can see, if we zoom out a bit, Bitcoin has been in a long, persistent bullish red RSI channel all the way back to April 2020, at which Bitcoin was trading at $8,800. And mind you, not a single time since then, corrections included, has the RSI crossed the lower bearish blue line to swap from its bullish red channel. In this sense, RSI channels are reliable indicators as to what the underlying is in fact up to. However, then came last year, during which Bitcoin changed the tune amidst its spring plunge. And this too changed from being a long-standing bullish red channel to swapping to a bearish blue one. And this is where things get truly interesting. Given that we did not get a lower bullish red line closing prior to making our way up, this was in fact a dire warning to the attentive analysts that we, despite our new recent all-time high, we're still in a corrective mode. My only regret here is that it passed me right by. For here's the thing, unless we can make some sort of a lower bullish red closing to mark the end of a bearish price development into a sustainable bullish one, chances are strongly in favor that we're stuck in a corrective mode. And the same applies to the present state as well, for unless we can make some sort of a lower bullish red line closing on the daily, we are by no means done with this seemingly flat correction. Now, don't get me wrong, we may still see some price recoveries, but all in all, we'd still be stuck in a weak bearish blue channel, at which any recoveries are mere energy refills prior to dunking lower. With that said, now might just be the perfect setup for a lower bullish red closing from above, as we currently stem from low RSI levels. For we now stand a fair chance at making that dynamic movement we keep obsessing about. For there sure are differences in lower bullish red signals, with this one here being the absolute strongest of them all. Should a recovery too, however temporary, somewhat reset the fear and greed index to neutral without having made a lower bullish red closing on the daily on its way up, then we'd all do wise in taking a deep breath and step to the sidelines before plunging further down. And last but not least, if we take a look at Marathon on the 2-day chart, we can see how it's found perfect support on the SMA 200 line that we recently discussed as being the final key level of support, and how this line holds some serious historical bearing too. As you may be aware of already, my standard approach to charts is the logarithmic one, especially so in high volatility pieces like Marathon. But if we swap to the arithmetic one for a change, we see that this moving average perfectly aligns with this diagonal support line. Based on the short-term bullishness in Bitcoin, whether that will bring us to new all-time highs or just instill some good old false hope by jacking us up to 50k or so before taking its poison to the low 30,000s, these separate findings in Bitcoin and Marathon do add to our technical bull case. Regardless of what, I do expect some sort of a price relief in Marathon. However, my main objection and skepticism are equal to that of Bitcoin. If Marathon fails to find solid ground underfoot in terms of a lower bullish red closing on the daily, then we ought to abstain from getting too excited too quickly, for in such case we'd be stuck in a very weak bearish blue channel, one that in turn would be waiting to sink us down to new lows. At the moment, Marathon is down by 70% from its all-time high, and just like minus 40% is a golden retracement number for Bitcoin, so is minus 70% for Marathon. And on a final note, just like Bitcoin is in the midst of a seemingly technical breakout, so too is Marathon trading right below a picture-perfect resistance of its own. What particularly excites me, however, is how the daily RSI too has established a downsloping technical resistance of its own. This may not seem as much, but it will add some extra oomph to any technical breakout. And upon a technical breakout, it of course all comes down to how far Bitcoin were to go. Given that Bitcoin is still in a flat correction mode, a move towards $50,000 to $53,000 should be technically fair to expect. This would amount to a 16 to 23% price increase from its current levels, which in all fairness should carry Marathon to somewhere between at least $34 to $40.